Hey everyone, welcome back to Corporate Decoder, the place where we unpack the dense jungles of corporate filings to find the real story. You know, sometimes these reports are like reading a novel, and sometimes they're more like a choose-your-own-adventure with a very confusing ending, especially when it comes to how much money a company is actually making or losing. Today, we are diving deep into Simpson Manufacturing Company Incorporated's latest annual report. This is the big one, the 10K, for the year ending the 31st of December 2025. We're going to cut through the jargon and tell you exactly what this report means for the company and for anyone watching their stock. Stick around because we've got some fascinating financial insights, some surprising risk factors, and a look at how Simpson is really positioning itself in the market. And if you love getting crystal clear insights from these kinds of documents, make sure you are subscribed and check out our Discord community linked down in the description. Alright, let's get straight into it. This report is from Simpson Manufacturing Company Incorporated, a Delaware incorporated company that has been around for a while, known for its structural solutions for wood and concrete construction. They're the folks behind Simpson Strong-Tie products, which you've probably seen if you've ever been to a lumber yard or worked on a construction site. First off, let's check out their stock performance. As of the 19th of February 2026, there were over 87,000 holders of Simpson stock. They've been paying dividends, and in 2025, they paid out $47.6 million in cash dividends. That is a pretty good sign that the company is generating enough cash to return some to its shareholders. Now, for the real meat and potatoes, the financial results, we're going to focus on the last few years to see the trends. Their total net sales in 2025 were over $2.3 billion, which is an increase of about 4.5% from the previous year. That growth seems to be driven by price increases in some acquisitions they made in 2024, but also by a slight dip in sales volumes. So they are selling more value, but maybe not necessarily more units. Their gross profit, which is what is left after they pay for the materials and direct labor to make their products, also went up by 4.5%, keeping pace with sales. This means their profit margin on the products themselves stayed pretty steady. However, they're seeing some pressure from things like tariffs and higher factory, overhead, and labor costs. When we look at their income from operations, which is after paying for all their running expenses like selling, marketing, and administration, it increased by about 6.5% to just under $458 million. So despite those rising costs, they managed to boost their operating profit. And finally, their net income, the bottom line, was $345.1 million in 2025, up from $322.2 million in 2024. That translates to diluted earnings per S-share of $8.24, an increase from $7.60 the prior year. So financially, on paper, things look pretty good. Let's break down where this money is coming from. Their North America segment, which is their biggest, saw net sales increase by 4.5%. Their wood construction products, which include connectors and fasteners, are their bread and butter, making up over 84% of their sales. Concrete construction products are growing too, but even with price increases, those volumes were down in North America. Mostly because of fewer housing starts, especially in areas with stricter building codes where Simpson's products are used more. Their Europe segment also saw a nice sales increase of 4.3%, helped by favorable currency exchange rates and some price increases and volume growth. They are seeing a growing use of wood construction in Europe due to housing shortages and new environmental regulations, which is good news for Simpson. The Asia Pacific segment is much smaller, and they don't seem to be giving us much detail there, saying it is not significant to their overall performance, which is fine. Now, no company is without its risks, and Simpson lays these out pretty clearly. A big one, as you might expect, is the housing market. Their business is heavily tied to us housing starts and residential remodeling. So anything that rocks the housing market, like interest rate hikes, consumer confidence, or even bad weather, can directly hit their sales. They also mentioned having a few large customers, and losing even one of them could really hurt their sales and profits. Another major concern is the price of raw materials, especially steel. Steel prices can swing wildly based on global events, trade policies, and supply chain issues. They specifically mentioned tariffs on fasteners and anchors in 2025, which negatively impacted their cost structure. And here is the kicker. They are not always able to pass these higher costs onto their customers. They also rely heavily on third-party transportation. So if shipping gets more expensive or harder to get, that is another point of pressure on their profits. Cybersecurity is a big topic these days, and Simpson is no exception. They've had some security incidents in the past, including one in October 2023, and while they say it did not materially affect them, they are investing in better security measures. This area is always a risk for any company with a large digital footprint. Let's look at how they're growing. The report mentions 3 acquisitions in 2024, calculated structured designs. Inc., a software company, Monet Desor Incorporated, which makes large-scale saws for the truss industry, and QuickFrames USA LLC, a maker of pre-engineered structural support systems. These acquisitions are contributing to their sales growth. Good strategy for growth beyond just organic. When companies buy other companies, they often record goodwill on their books. This is basically the premium paid over the fair value of the acquired company's net assets. Their goodwill increased significantly, mostly in Europe. They test this goodwill annually to make sure it has not lost value, which is a common practice to check if those acquisitions are still performing as expected. They also have significant intangible assets like patents, trade names, and customer relationships, which are all important for a company in their industry. They're also managing a significant number of leases for their facilities. As of the 31st of December 2025, they had over $117 million in lease liabilities. This shows their commitment to having a strong physical presence globally. Taxes are always a factor. Their effective income tax rate was around 25.4% in 2025. They're dealing with a complex global tax environment, and they mention the impact of new international tax rules like the OECD's global minimum tax. It is interesting to see how companies navigate these international tax landscapes. Looking at how they break down their business, they have North America, Europe, and Asia Pacific. North America is by far their biggest market, accounting for about 77.8% of their sales. Europe is the next largest at around 21.4%, and it is good to see they specifically call out their wood products, accounting for about 84% of sales, and concrete products around 15.5%. This gives us a clear picture of where their revenue is really coming from. Let's just quickly glance at their balance sheet. Total assets grew to over $3 billion. Their cash and cash equivalents also saw a healthy increase, ending 2025 at over $384 million. This is good for liquidity. Their total liabilities also increased, but their equity grew even more, which is a positive sign. And their income statement shows that net income of $345 million for 2025, as we saw earlier. Diluted earnings per S-share were $8.24, up from $7.60 in 2024. This is a solid performance. Their cash flow statement shows they generated a strong $458 million in cash from operations in 2025. This is crucial because it means the core business is generating enough cash to fund its activities. They used a significant amount of cash for investing activities, largely in capital expenditures for facilities and equipment, and also for financing activities which included paying down debt, repurchasing stock, and paying dividends. It is clear they are reinvesting in the business and returning value to shareholders. Now, sometimes the most important details are hidden in the footnotes. A major change for them in 2025 was switching their depreciation method for machinery and equipment to the straight-line method. This made their depreciation expense lower, boosting net income by about $5.1 million. It is a change in accounting estimate, but it did make their reported profits look a bit better for the year. They also mentioned their allowance for doubtful accounts, which is basically a buffer for money they might not collect from customers. It is a standard practice and seems to be managed well. Looking ahead, they declared another dividend in January 2026, and they also decided to retire nearly 700,000 shares of stock they were holding, which can sometimes signal confidence in the company's future. So, what is the big picture here? Simpson Manufacturing Company Incorporated seems to be navigating a challenging economic environment quite well. They've managed to grow sales and profits despite rising costs, supply chain pressures, and the cyclical nature of the construction industry. Their acquisitions are contributing to growth, and they are investing in their facilities and digital tools. However, the dependence on the housing market and the potential impact of raw material price fluctuations, especially steel, and the effect of tariffs, remain significant risks. Their international operations are growing but also expose them to currency fluctuations and geopolitical risks. Overall, Simpson appears to be a well-managed company with a strong market position in its niche. The strategy seems to be a mix of organic growth, strategic acquisitions, and returning capital to shareholders. The management is clearly focused on innovation and customer service, which are key differentiators. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. And hey, for more in-depth discussions and to connect with other finance enthusiasts, check out our Discord community linked in the description below. Thanks for watching. See you next time.